Another day and another scam by duplicitous lenders. This one is the myth of the no-cost refinance, and it can cost you thousands of dollars and unnecessarily reset your loan term. So whenever there's a nice drop in rates, the refinance vultures come out and they circle overhead. And because refinancing, can be big business for lenders. From a loan perspective, it's another loan. It's the same deal as when you purchase the home. So, these companies can pull the same profit off of it. These loan officers can make the same commission. It's potentially a financial windfall, which is why every time rates do drop, or every time you become eligible for a refinance, you start getting these mailers, you start getting these auto texts, you start getting these emails. Hey, great time to refinance. Rates are at so-and-so. We'll get you in there. No cost. And you got to be really wary, right? It's the old adage, if something seems too good to be true, it probably is. And, before I got into mortgages, I was getting this stuff too. And I even fell victim to it once upon a time. But now I know better, and I'm actually in a position to help people not get taken advantage of and what to look for in a refinance to make sure the juice is worth the squeeze, because that's really the best phrase to describe a refinance. Is the juice worth the squeeze? Because there are pros, just like with anything in life, there are some offsetting cons, and I'm going to break that down for you today. So first off, when a lender says no cost or free refinance, what do they actually mean? Because there is no such thing as a no cost or a free refinance, but this is what they mean, right? One of the major differences between a refinance and a purchase is with a refinance, you do have the option to roll some, if not all, of your closing cost into the loan so that you're out of pocket, and that's the key word, out of pocket can be very small, maybe even nothing at all. So when they say free or no cost, what they really mean is no out of pocket. But your loan balance is going to increase because with a refinance, you still have your prepaid taxes, prepaid insurance, prepaid interest. You're going to have titling fees. If you're VA, there's going to be a reduced 0.5% funding fee. All this goes into the loan. And the reason that's important is twofold, right? One, yes, the reduction in rate is saving you money, but it's offset a little bit because your loan balance is going up. So you're back up to here. All right, there's some offsetting, compensating factors there that you just gotta know. Here's the second reason is when you refinance, you have to take it on the chin that you are restarting that 30-year amortization schedule. And you're signing, they give you that big scary packet. It's like 10 pages long and it breaks down like all 360 payments, and then the ratio of principal and interest sucks, man. But, and then you start digging in. And then when you refinance, that resets back. Okay, so you have to accept that as well. And a lot of lenders will not ever talk about that. Okay, but it is a consideration. Now, for a lot of people, refinancing does make sense. And depending on your situation, can make sense or not make sense for you. The same scenario could make sense for one person and not for the other, right? So here's the benefits of the refinance, right? Of course, everyone, right, you can drop the interest rate. Now, how much, right? That's a question I get. How much did I drop? Well, the conversation has to start at 0.5%. Has to start there. 0.5% to maybe 0.75%. But some of that is going to be dictated by your loan amount. So the needle on monthly payment is going to move a lot more at $500,000 than it is at $200,000, right? So that's just math, okay? So, generally speaking, the conversation will start, not a done deal, start at 0.5%. The smaller the loan balance, that's probably not going to be enough to get you there. The bigger the loan balance, maybe it's worth it. So that's number one. Number two is that you are going to skip a month's payment. And for a lot of people, that's really important because maybe they're behind on some bills. Maybe they're trying to save up for something. Maybe they want to invest it, whatever it is. I hear it a lot. They're going to skip that month's payment. In fact, if it numerically works and there's a price to be paid for it, you can skip 2 payments. Okay. But for a lot of people, this is very, very good. So now number three, for people that have a little bit of a longer vision, I mean, you're greatly reducing your interest paid over the lifespan of the loan. And in some situations, you're digging into that rate. And if something happened and rates go back up, which is entirely possible, in today's world. You may have a rate that's advantageous for assumptions, okay? So you gotta think about that as well. So these are the positives of a refinance. Also, I'll just throw it out there for those of you that are in an adjustable rate and you wanna get to permanent, that's a fantastic reason to do a refinance, because you do that, get a lower rate and all that other stuff at the same time. Now, those are all the good things, okay? But you still have to look at the cons. So once again, when you get that loan estimate from your lender, the first thing you're always going to do is look at the interest rate. That's fine, that's fine. Second thing you need to do, look at the loan balance. And bottom right of that loan estimate, there's like a cash to close section and all this other stuff. It'll show you right in there your original payoff, the total closing cost, what your new loan balance is. You gotta make sure that number sits well with you, right? Because if you are refinancing and it's going to save you $100 a month, but your loan balance is going up $9,000, barring some emergencies, is that worth it? Is that juice worth the squeeze? Maybe not. You really have to look at that, okay? Fortunately, the VA has some rules in place to help protect you from falling into the trap of some really terrible refinance scenarios. Number one is a 36-month recoupment period. So whatever costs you incur up front, you have to be able to recoup within 36 months, okay? Also, you have to move the needle 0.5% on the interest rate. Now, you can only buy down so many discount points. So there's some rules to hedge, but still, even with that operating area there, you can still get taken to the woodshed, okay? If there's nothing else that any of you take from this video, just please remember, the no-cost, free refinance is absolute nonsense, malarkey. It's a myth, it's made up, it's never gonna happen, okay? There's always costs to these things, and it's critical that you know what they are so that you can juxtapose them against the tangible benefits. If you are looking to refinance, or if you have been given a refinance estimate by another lender and you have questions, please reach out to me. We will set up a phone consult. I'll go through what you have already. I will explain the pros and cons of the refinance. I'll do some quick calculations of your current interest rate, loan balance versus where we could get you to tell you right then and there if I think it's really worth it for you to pursue. And I can answer any other questions at this time. If you enjoyed this video, please subscribe to this channel and check out my other content.